Hello and welcome to the Investing Iguana, where we provide you with insightful analysis and tools for investors. We will talk about Mastercard and Visa, two of the giants in the payment processing industry. We will compare their business models, financial performance, growth potential, and valuation, and see which one is a better buy right now. Mastercard and Visa are well known for their ubiquitous cards that dominate the global card network. According to the Nielsen report, they collectively account for 64% of card purchase transactions in 2020. They are both wide-moat businesses with high profitability and resilience. They have also been huge long-term winners for patient investors. However, they also faced some challenges and competition in the payment space. The COVID-19 pandemic has affected their cross-border revenues, which are their most lucrative segment. They also have to contend with emerging fintech players like PayPal, Square, and Stripe, who are trying to disrupt the payments industry with new technologies and platforms. So how do Mastercard and Visa compare on various metrics? Let's take a look. First, let's look at their revenue growth. Mastercard has been growing faster than Visa in recent years, thanks to its smaller size and higher exposure to emerging markets. In the last 12 months, Mastercard's revenue grew by 10%, while Visa's revenue grew by 6%. However, both companies have already surpassed their pre-COVID revenues in their most important segments, showing their strong recovery from the pandemic. Next, let's look at their profitability. Both companies have very high margins and returns on capital, reflecting their asset-light and scalable business models. Mastercard has slightly higher margins than Visa, but Visa has slightly higher returns on capital than Mastercard. Both companies generate a lot of free cash flow, which they use to invest in growth initiatives, pay dividends, and buy back shares. Now, let's look at their growth prospects. Both companies have plenty of room to grow in the long term, as they benefit from the secular trends of digitalization, e-commerce, and financial inclusion. They also have opportunities to expand into new areas like cryptocurrency, buy now pay later, and open banking. However, they also face some risks and uncertainties, such as regulatory pressures, cyber attacks, and geopolitical tensions. Finally, let's look at their valuation. Both companies are trading at a significant premium to the market and their historical averages. Mastercard has a forward price-to-earnings ratio of 46, while Visa has a forward price-to-earnings ratio of 40. Both companies have a forward price-to-sales ratio of over 20. These valuations imply very high expectations for future growth and profitability. So which one is a better buy right now? Based on our analysis, we think that Mastercard is slightly better than Visa because it has higher growth potential, higher margins, and more exposure to emerging markets. However, we also think that neither company is attractive at current levels because they are too expensive and face too much competition. We would wait for a better entry point before buying either stock. If you enjoyed this video and want to stay updated on the latest investing trends, tips, and expert advice, make sure to hit that like button and subscribe to the Investing Iguana. We're constantly working on new content to help you navigate the world of investments with confidence. And don't forget to hit the notification bell so you never miss any of our videos. If you have any questions or suggestions for future topics, feel free to drop a comment below. We love hearing from our audience. Thank you so much for joining us today, and we'll see you in the next episode. Until then, keep investing wisely and growing your wealth. This is the Investing Iguana, signing off.